Morning, everybody. Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning. As always, if you find the content in this video helpful, subscribe to our channel so you can see the information every week. But let's jump right into it. We're going to focus in on the four major U.S. indexes. We're also going to take a look at the transports. We'll also take a look at the banking index as well. And we're going to take a look at a couple of different sentiment readings as well as a breadth reading in this week's video. So for starters, let's take a look in at the S&P 500. Now, what I'm going to do here is I am going to look at where we were exactly 1 month ago versus where we're at today. And what we can very clearly see is in the last month, we have essentially accomplished nothing in terms of price action here on the S&P 500. The original rally happened within the first 15-day period, and then essentially we've traded sideways from that point in time. So when we're talking about these major key levels in these videos, they haven't changed over the last couple of weeks because price itself has not appreciated anywhere. What we looked at in last week's video was the area in which we ran into major resistance on all four of the indexes. The S&P 500 failed right there at that 2950 zone, this major resistance that was in play last July, last September, before we ultimately broke out there on 10/28 of last year. Everything I said still holds true from last week in terms of this is the major area. If the bulls can get us back up above this zone here, they have a shot back to taking us to the highs. If we do not push above that, right, then we have the potential to see that subsequent pullback. But really what we're doing is we're biding time sideways. And that's really what we've done here over the last 3 weeks. So we're trading inside this range. And until we break either up or down, nobody's really in control here. All right. The Bears had control, obviously, in March into the beginning of into the end of March, beginning of April. The Bulls took control back, and then over the last month, really from the middle of April on, nobody's been in control. We've just been trading sideways. We take a look in at the NASDAQ, right? Same thing, right into that resistance zone. And if we look at it, really, we have traded over the last month inside this box, and we really have had little appreciation in either direction. So, again, major resistance level at that 9,000 zone. We're going to continue to watch it there. We come in and we take a look at the Dow Jones, much weaker than the NASDAQ. We've discussed that a number of times as well in these videos. And once again, we can see really for the past month, we are trapped inside this box. So, same thing, really sharp rally for a couple of weeks and then just sideways action. So how this resolves ultimately at the end of the day is going to be the most important. But we may not get resolution right away, and it may not be for another couple of weeks. We look in at the Russell. The Russell rallied right up to that 1350 zone, sharp rejection. This one actually did see a much greater appreciation over the last month. It had lagged so hard, it essentially was playing catch up, but it did fail still at that major resistance zone. But when we looked at the S&P, the NASDAQ, and the Dow from the 7th of April, price hadn't appreciated much. Over here on the Russell, we're up about 10%. Mind you, it's still the leader in terms of percentage down for the year. It's still been extremely weak, but it played a little bit of catch up there, and that was one of the really good signs for the bulls. But once again, it got rejected right at that major resistance zone, kind of negating that the mid and small caps essentially could take the lead, and we'd see that rotation over. The banking index really beat up. Financials are acting horrible in this market. Couldn't even get back up to the 2018 lows. In fact, failed right at the gap down from March 9th and couldn't push above that even to test this gap zone up here. And actually, if we look at April 7th, the banking index is down while the rest of the indexes were slightly up. So it's still not accomplishing any move to the upside, but showing, again, additional weakness to the downside. You don't want to see financials continue to be weak. That is not a good sign. Now, initial jobless claims once again came out this week. It was 3.1 million. That brings our 7-week total to 33.5 million people, which is 12 times higher than the prior worst 5-week period in the last 50 years. the numbers are just staggering when we take a look at the unemployment and the jobless claims that are coming in week over week over week. This is a major problem. The economy is in a lot of trouble, and we're seeing that underneath the surface. And also, let's take a look in at the transports when we're talking about that, seeing how goods are moving through the economy. Once again, rejected a major resistance zone, and if we do that month over month, the 7th to the 7th, the transports are down to over 2%. So you got the transports and the financials are leading on the downside against the rest of the indexes. That's a major problem. This is a major concern that I have. Now, let's take a look at some things that are actually positive here. Let's take a look at our breadth readings there. We've talked about this a lot last year. If you remember, we looked at that 200 to 300 level on the positive side for the NASDAQ McClellan Summation Index as that resistance zone. And that happened in July and September and October and December before we ultimately made that breakout in December and stocks subsequently pushed higher. Well, we have made quite a rally back up from major negative territory, from actually worse breadths than from 2018 bottom that was put in there. And we have rallied back up. And we're right into that zone where we've had a lot of issue pushing higher in the last few years. Now, the initial push off of the bottom in 2019 actually did go all the way back up to 700. So we could still continue to see more upside if you were looking at it in relation to that. But again, that 200 to 300 zone is major resistance on this, and it's something we're going to have to continue to pay attention to because we've had that great rally. Does breadth stall out here? If it does, that would be another very bad sign for the bulls. But we are in positive territory, which means we have accomplished a lot here over the last month, which is a win in their column. Next, I want to take a look at the Smart Money, Dumb Money Confidence Index here. I talk about this a lot. Smart money confidence is still extremely high. It's at 70%. Dumb money confidence is right in the middle, right? We would expect these to cross at some point here in the future. Seeing another push higher and seeing smart money essentially take more chips off the table and dumb money be a bit more aggressive would certainly be cause for concern for a potential, pullback. This is certainly something that we're watching. We get crosses in this when we get to extremes quite frequently. And as you know, we talked about the major extreme that we had before the market actually pulled back down in terms of retail traders were about as bullish as they've ever been, and institutional money was about as cautious as they've ever been. And sure enough, we had that big sell-off. So we're going to continue to watch to see if this does make that flip back. Now, I know this video has been a little bit shorter than normal, but again, guys, really what we're paying attention to here is this zone. And until we break out either to the upside or the downside, right, we can look underneath the surface. We can try to gauge from sentiment, breadth, et cetera, which direction we're going to go. But at the end of the day, price action is going to tell all. And if we break up, that certainly leads credence to a continued move back up to those highs. If we continue to stall out here and ultimately do start breaking lower, then we certainly need to be worried about perhaps getting that double bottom test here on the downside. So as always, if you guys find the information in these videos helpful, you can reach out to me directly. I'm more than happy to discuss the market with you. You can also pick up the phone and give me a call at 814-580-9881 or Tedeschi at perspectivewealthplanning.com. I hope you guys have yourselves a fantastic week. As always, stay safe out there. Take care.